Question 1. The term previous year in income tax refers to A. Calendar year. B. Year before assessment year. C. Year after assessment year. D. Year of assessment. The right answer is B. Year before assessment year. Why? Because income earned during the financial year is called the previous year, and it's taxed in the next year, which is the assessment year. Question 2. Income tax is charged on the income of the A. Previous year. B. Assessment year. C. Financial year. D. Calendar year. The right answer is A. Previous year is the correct answer. Because we always pay tax on the income earned in the previous financial year, not the current one. Question 3. The term assessee includes A. Only individuals. B. Only companies. C. Any person liable to pay tax. D. Only firms. Correct answer is C. Any person liable to pay tax. Here, assessee is a broad term. It can be an individual, firm, company, or even a local authority if they are liable to pay tax or penalty. Question 4. Which of the following is not a capital receipt? A. Loan taken from bank. B. Amount received on issue of shares. C. Compensation for loss of income. D. Sale of fixed asset. Answer is C. Compensation for loss of income. That's actually considered a revenue receipt because it's related to regular income, not capital or investment. Question 5. Residential status is determined for A. Calendar year. B. Assessment year. C. Previous year. D. Lifetime. Answer is C. Previous year is the right choice. Because residential status is assessed each financial year based on the number of days stayed in India during that specific year. Question 6. Mr. A stayed in India for 190 days in the previous year. His status is A. Non-resident. B. Nor. C. Resident. D. Deemed resident. The answer is C. Resident. Since he stayed more than 182 days in India, he qualifies as a resident under the Income Tax Act. Question 7. An individual becomes RNO if A. Not resident in 2 out of 10 preceding years. B. Stayed in India for less than 729 days in 7 years. C. Both A and B. D. None. Correct answer is C. Both A and B. To be RNO, both conditions must be satisfied. It's a special category between resident and non-resident. Question 8. For HUF, the residential status is based on A. Karta's stay in India. B. Member's income. C. Control and management of affairs. D. All of the above. The answer is C. Control and management of affairs. For Hindu undivided families, it's not about where members live, but where the decisions are made, that is, the place of control. Question 9. Income from agriculture in India is A. Fully taxable. B. 50% taxable. C. Fully exempt. D. Taxable above 5 lakhs rupees. Answer is C. Fully exempt is the right answer. Agricultural income earned in India is fully exempt under Section 10(1) of the Income Tax Act. Question 10. Salary received by an Indian citizen from the UN in India is A. Exempt. B. Fully taxable. C. Partially taxable. D. Taxable above 2.5 lakhs rupees. Answer is A. Exempt is correct. Salary from the United Nations is specially treated as exempt, even if received in India, due to international agreements. Question 11. Rent-free accommodation given by employer is A. Tax-free. B. Perquisite and taxable. C. Notional income. D. Capital income. Answer: B. Perquisite and taxable. It is a taxable perquisite under income from salary. Question 12. Which of the following is exempted income? A. Winning from lottery. B. Capital gains. C. Interest on savings account. D. Scholarship for education. Answer: D. Scholarship for education. Scholarships for education are fully exempt under Section 10(16). Question 13. Income accrued outside India is taxable for A. Non-resident only. B. Resident only. C. No only. D. Not taxable at all. Answer: B. Resident only. A resident in India is taxed on global income. Question 14. Dividend received from an Indian company is A. Exempt. B. Fully taxable. C. 50% taxable. D. Capital receipt. Answer: B. Fully taxable. As per Finance Act 2020, dividend is taxable in shareholders' hands. Question 15. Clubbing provisions apply in case of A. Income from salary. B. Gift to minor child. C. Share in HUF. D. Professional income. Answer: B. Gift to minor child. Income from assets transferred to a minor child is clubbed with the parent's income. Question 16. Leave encashment received during service is A. Fully exempt. B. Fully taxable. C. 50% taxable. D. Taxable for private employees only. Answer: B. Fully taxable. Leave encashment during service is always taxable. Question 17. House rent allowance is A. Fully taxable. B. Fully exempt. C. Partially exempt. D. Capital income. Answer: C. Partially exempt. HRA is partially exempt under Section 10(13)(a), subject to conditions. Question 18. Which of the following is a revenue receipt? A. Sale of land. B. Loan taken. C. Interest on fixed deposit. D. Share premium. Answer: C. Interest on fixed deposit. Interest earned from FDs is considered revenue income. Question 19. A foreign company is treated as resident in India if A. It has a branch in India. B. Paid tax in India. C. POAM is in India. D. Shareholders live in India. Answer: C. POAM is in India. Place of effective management being in India makes the foreign company a resident. Question 20. Agricultural income from land situated outside India is A. Exempt. B. Partially exempt. C. Fully taxable. D. Capital income. Answer: C. Fully taxable. Only agricultural income from India is exempt, foreign agricultural income is taxable. Question 21. Which of the following components of salary is fully taxable? A. Gratuity. B. Dearness allowance. C. Leave travel allowance. D. HRA. Answer is B's. Dearness allowance is the correct choice. It's always fully taxable because it's a fixed part of salary paid to meet inflation, unlike HRA or LTA which can have exemptions. Question 22. Which of the following is not a perquisite under salary income? A. Rent-free house. B. Free club membership. C. Bonus. D. Car facility. Answer is C. Bonus is right. It's a part of direct salary, not a benefit or perquisite like rent-free accommodation or car facility. Question 23. HRA exemption is not available if A. Employee lives in rented house. B. Employee owns a house and stays there. C. Employee rents a flat in Mumbai. D. HRA is part of salary. Answer is B. Employee owns a house and stays there. HRA benefit is given only when you pay rent. If you stay in your own house, there's no HRA exemption. Question 24. For HRA exemption, least of the following is exempt. A. Actual HRA received. B. 50% of salary, metro cities. C. Rent paid minus 10% of salary. D. All of the above. Answer is D. All of the above is correct. HRA exemption is calculated by comparing all three values and taking the lowest. Question 25. Deduction under Section 24(b) relates to A. Municipal taxes. B. Interest on housing loan. C. Principal on housing loan. D. Repairs of house. Answer is B. Interest on housing loan is the right answer. Under Section 24(b), you can claim up to 2 lakh rupees for interest paid on a self-occupied home loan. Question 26. Self-occupied house property has A. Gross annual value is equal to nil. B. Standard deduction is equal to nil. C. Rent is equal to exempt. D. Taxable at slab rate. Answer is A. Gross annual value is nil. For a self-occupied house, there's no rent or income, so GAV is treated as 0. Question 27. Depreciation for normal business assets is allowed under A. Section 32. B. Section 80C. C. Section 10(38). D. Section 24. Answer is A. Section 32 is the right choice. It deals with depreciation deductions on business assets under profits and gains from business or profession. Question 28. Remuneration to partners is A. Always allowed. B. Allowed only to working partners. C. Not allowed at all. D. Allowed to all partners equally. Answer is B. Allowed only to working partners. And even that too, within limits specified under Section 40(b). Sleeping partners aren't eligible. Question 29. Presumptive income for small business under Section 44(ad) is A. 4% of turnover. B. 6% of turnover. C. 8% or 6% depending on mode. D. 10% flat. Answer is C. 8% or 6% depending on mode is correct. If you take payments digitally, the rate is 6%, otherwise 8% for turnover up to 2 crore rupees. Question 30. Long-term capital gains on listed shares is taxed at A. 10% above 1 lakh rupees. B. 20% with indexation. C. 30% flat. D. Exempt. Answer is A. 10% above 1 lakh rupees is the answer. LTCG on listed shares is tax-free up to 1 lakh rupees and taxed at 10% on the excess amount. Question 31. An asset is considered short-term if held for less than A. 12 months. B. 24 months. C. 36 months. D. Depends on asset type. Answer is D. Depends on asset type is correct. For listed shares it's 12 months, for immovable property it's 24, and for other assets, 36 months. Question 32. Cost of acquisition for bonus shares is A. Face value. B. Nil. C. Market price. D. Indexed cost. Answer is B. Nil is the right choice. Since bonus shares are given free, their cost is treated as 0 while calculating capital gains. Question 33. Interest income on fixed deposit is taxable under A. Capital gains. B. Salary. C. Income from other sources. D. Exempt. Answer is C. Income from other sources. FD interest isn't linked to business or salary, so it falls under other sources. Question 34. Taxability of gifts exceeding 50,000 rupees from non-relatives is A. Fully taxable. B. Fully exempt. C. Partially taxable. D. Taxable if in cash only. Answer is A. Fully taxable is the correct answer. If the total value of gifts from non-relatives crosses 50,000 rupees in a year, the entire amount becomes taxable. Question 35. Which of the following incomes is not chargeable under PGBP? A. Sale of stock. B. Interest on partner's capital. C. Rent from building let out for business. D. Salary received from employer. Answer is D. Salary received from employer is the answer. Because salary income is taxed under the head Income from Salary, not under Business or Profession. Question 36. Under Presumptive Income Scheme, books of accounts are A. Mandatory. B. Optional. C. Mandatory if profit less than prescribed %. D. Not applicable. Answer is C. Mandatory if profit is less than prescribed %. If the taxpayer declares less than 8% or 6% profit, books of accounts and audit become compulsory. Question 37. Standard deduction for salary income in FY 2023-24 is A. 40,000 rupees. B. 50,000 rupees. C. 2 lakhs rupees. D. 1 lakh rupees. Answer is B. 50,000 rupees is correct. Every salaried employee gets a flat deduction of 50,000 rupees under the current provisions. Question 38. Capital gains are not taxable if reinvested in A. Shares. B. Gold. C. Residential property under Section 54. D. Fixed deposit. Answer is C. Residential property under Section 54. If you reinvest LTCG from a house into another residential property, the gain is exempt. Question 39. Income of a minor child is clubbed with A. Guardian. B. Father only. C. Mother only. D. Parent having higher income. Answer is D. Parent having higher income is the answer. The law says minor's income should be added to the income of the parent who earns more. Question 40. Business loss can be carried forward for A. 4 years. B. 5 years. C. 7 years. D. 8 years. Answer is D. 8 years is correct. A business loss that isn't set off in the current year can be carried forward and adjusted for up to 8 assessment years. Question 41. Maximum deduction under Section 80C is A. 1 lakh rupees. B. 1,50,000 rupees. C. 2 lakhs rupees. D. 2,50,000 rupees. Answer is B. 1,50,000 rupees is correct. That's the maximum limit for investments in schemes like PPF, LIC, ELSS, and tuition fees under Section 80C. Question 42. Which of the following is not allowed under Section 80C? A. PPF. B. NSC. C. Repayment of housing loan principal. D. Interest on housing loan. Answer is D. Interest on housing loan is the right answer. It's not covered under 80C, instead, it comes under Section 24B or sometimes under Section 80E. Question 43. Deduction under Section 80D is available for A. Tuition fees. B. LIC premiums. C. Medical insurance premiums. D. Donations. Answer is C. Medical insurance premiums. This section is specifically for health insurance policies, either for self, family, or parents. Question 44. Under Section 80U deduction is available to A. Any taxpayer. B. Family of disabled person. C. Taxpayer with disability. D. Senior citizen. Answer is C. Taxpayer with disability. Section 80U is meant for individuals who are themselves disabled, not dependents. Question 45. Donation to PM National Relief Fund is eligible under A. ATG 100% deduction. B. ATC. C. ATGGA. D. Not deductible. Answer is A. 100% deduction under ATG is the right option. Donations to PMNRF don't have any qualifying limit, so the full amount is deductible. Question 46. Clubbing of income applies when A. Husband gives money to wife, and she earns interest. B. Husband and wife have joint FD. C. Wife earns salary. D. Mother-in-law gives to daughter-in-law. Answer is A. Husband gives money to wife, and she earns interest. That interest will be added to the husband's income under clubbing provisions. Question 47. Which of the following is not clubbed with parents' income? A. Interest from minor child's FD. B. Minor child's income from acting. C. Minor child's dividend income. D. Minor child's interest income. Answer is B. Minor child's income from acting is correct. If a child earns money from personal skills or talent, like acting or sports, it won't be clubbed. Question 48. If a person gives an asset to spouse, capital gains on its sale are A. Taxable in spouse's hands. B. Exempt. C. Taxable in donor's hands. D. Partially taxable. Answer is C. Taxable in donor's hands. Even though the asset is sold by the spouse, the capital gain is taxed in the hands of the original owner. Question 49. Assessment of individuals is based on A. PAN. B. Income slabs. C. Audit report. D. Business turnover. Answer is B. Income slabs is correct. Tax liability for individuals depends on slab rates and age, not PAN or turnover. Question 50. Rebate under Section 87A is available if income does not exceed A. 2.5 lakh rupees. B. 3 lakh rupees. C. 5 lakh rupees. D. 7 lakh rupees. Answer is D. 7 lakh rupees is the answer. Under the new tax regime, if total income is 7 lakh rupees or less, the rebate brings tax down to 0.